Volkswagen Group is our new market recommendation. When it comes to opportunities in electric vehicles, investors often gravitate towards new and exciting electric vehicle startups. However, I do not want to overlook one of the largest transport companies in the world, namely, Volkswagen. Volkswagen has a market capitalization of just over $100 billion and pays dividends, which is a rarity at this time in history. Just to put some of these numbers into perspective, Volkswagen sold 231,600 electric vehicles in 2020. In 2021 the number has almost doubled. Volkswagen wants about 20% of their volume to be electric vehicles in 2025. The company is pursuing electric vehicles quite aggressively. They plan to launch 70 different electric vehicle models in addition to 60 hybrid models by 2030. They plan to build about 60 battery factories in Europe by 2030, a network of charging stations in Europe and China. Why Volkswagen's plan to beat Tesla could crush more electric car stocks. Volkswagen recently shared parts of its plan to become the world's largest seller of electric vehicles by the middle of the decade. Although much of what Volkswagen has announced focuses on Europe, it will have global implications, not only for Volkswagen, but also for all other companies that are already or are planning to enter the electric vehicle space. This makes the news important for investors holding shares in electric vehicles, especially shares of small companies hoping for big growth. Let's take a closer look. Volkswagen's battery roadmap, reducing costs while improving performance. First, Volkswagen is working with partners to improve battery system performance and costs down to cell level. It plans to launch a new battery cell, which it calls a unified cell, in 2023 to be used by up to 80% of Volkswagen Group electric vehicles by 2030. Over time, as economies of scale and other measures, including recycling efforts, emerge, Volkswagen plans to reduce battery costs by up to 50% in entry-level segments and by up to 30% in high-volume mid-market segments. It's low enough to make Volkswagen's electric vehicles profitable and lower than what many potential competitors could achieve in the short term. Next, Volkswagen plans to introduce the solid-state battery cells currently being developed by QuantumScape, a company in which Volkswagen has a significant investment. That battery should further reduce charging time and costs while providing additional autonomy. Volkswagen will control huge production for battery cells in Europe. Volkswagen, together with partners, plans to have 6 active battery gigafactories in Europe by 2030. Each of the 6 plants will have an annual production capacity of 40 gigawatt-hours for a total of 240 GWh per year. The first 2 plants will be in Salzgitter, Germany, and Skellefteå, Sweden. The Swedish factory will be built with partner Northvolt and will produce premium cells for Volkswagen Group luxury vehicles. Operations are expected to begin in 2023. The Salzgitter plant will produce the new high-volume unified cells for Volkswagen's mass-market vehicles, starting in 2025. Volkswagen is also investing in charging. Volkswagen said it is also investing in a large-scale expansion of fast-charging networks in Europe, North America and China. In Europe, together with its partners, it plans to operate around 18,000 fast-charging points by 2025, up from around 3,600 today. Volkswagen notes that it will be enough to meet about a third of the total expected demand in Europe in 2025. Approximately 8,000 of these new points will consist of 150 kilowatt fast chargers installed at BP-owned gas stations. The rest will be built by the Spanish electricity company Iberdrola, Enel Group, an Italian supplier of electricity and gas, and by Ionity, a joint venture charging network created by Volkswagen and several other car manufacturers. In North America, Volkswagen said Electrify America, the charging network created as part of Volkswagen's $15.3 billion Dieselgate deal, will have about 3,500 fast charging points active and operational by the end of this year. And in China, Volkswagen plans a total of 17,000 fast charging points by 2025 through an existing joint venture. If you expect electric vehicle startups to stop automotive production, think again. Volkswagen's plan to take control of its battery supply chain and aggressively expand fast-charging networks obviously draws inspiration from Tesla's battery manufacturing and charging network strategies. But for once, the key points for electric vehicle investors aren't just about Tesla. Volkswagen is making it clear, as it has been for a few years, that it intends to remain one of the world's largest automakers as the world shifts to zero-emission vehicles. In particular, its plans to control battery supply and to promote the expansion of charging networks will limit opportunities for new and smaller entrants into space, especially if other large automakers such as General Motors and Toyota follow suit, as they almost certainly will. In other words, the idea that a small startup will disrupt the auto industry and take over a major share of the market no longer seems likely. For many of the newcomers, the choice may be to partner with a big automaker soon or get crushed. If you are wondering what are the brands that are part of Volkswagen Group, this includes 12 brands from 7 different European countries. For cars, Volkswagen, Audi, Seat, Skoda Auto, Bentley, Bugatti, Lamborghini, and Porsche. For motorcycles, Ducati. For commercial vehicles, Volkswagen Commercial Vehicles, Scania AB and MAN.